Good morning, everyone. So today we'll start the new chapter, that is joint venture account. Okay, and in the first class of this chapter, second class of this chapter, sir has explained you the method. Okay, so according to that method only, we will try to maintain the books of account and try to solve the first question. Okay, where each venturer used to open in his books of account one joint venture account and the co-venturer account. Okay, I hope you have understood. Okay, that joint venture account represent the result of the business, that is profit or loss. Okay, so it is like a trading or profit and loss account. Okay, this account is debited by the cost of goods, expenses like goods supplied by the venturer, etc., and are credited by sale proceeds, unsold stock taken by venturer, etc. And what we have to keep remember, if the credit side, okay, if the credit side is greater than debit side, then venturer will have the profit or the vice versa. Okay, so first we'll read the question of the day. Quickly I'll read for you. Okay, Moon and Company bought goods of the value of rupees 7,500 and consigned them to Star and Company. Okay, so that means two venturers are here. One is your Moon and Company and another is your Star and Company. Okay, to be sold by them on joint venture. Profit being divided in the ratio of 2:1. So PSR is given for you 2:1. They also paid rupees 550 for freight, insurance and cartage and drew on Star and Company for rupees 2,900. That means they have paid some expenses also, and they have drawn a bills receivable, okay, on Star and Company. Fine. So that means Star and Company has to pay this amount to the Moon and Company. Now, Star and Company paid rupees 275 for storage and rent. That means another expense. The sales released rupees 12,500. So sale has proceed for rupees 12,500, and the sales expenses of rupees 250 were paid by the Star and Company. So one more expense that is paid by the Star and Company. The latter forwarded a side draft for the balance due to Moon and Company after charging their commission at 5% on the gross sale. So 5% commission Star and Company is charging on the gross sale, that is your 12,500. Okay, show the joint venture account and other ventures account in the books of both the parties. So when you have the questions like that, show the joint venture account and other venture account in the books of both parties. You have to make out. This is the first method which is explained by your sir. Okay, so quickly we will start the solution. Okay, where we have to, as I told, okay, we have to open two accounts in each venturer's books. Okay, one is joint venture and another will be co-venturer account. So we have to write like this. Okay, wait a minute. In the books of Moon and Company, okay, which account we are opening? We are opening the joint venture account. So in the books of Moon and Company joint venture account, we are going to open. This will be your particular, this will be your amount. I am going for shortcut, please try to understand. Particular amount, and just now we have seen that this account will get debited by the cost of goods, expenses, okay, and it will get credited by the sales proceeds and unsold stocks or stock taken by the ventures, like that. Okay, and sir has also, I remember sir has told you, whenever you are making this account, okay, now we are making this account in the books of Moon and Company. So whatever purchase and expenses, okay, will be done by the Moon and Company, that we will record in terms of to cash, okay, and whatever expenses or purchase done by the other venturer, okay, who will be the co-venturer of this, that is your Star and Company, that we will make note in their name. Okay, so let's start quickly. Very first we had in the question, Moon and Company bought goods of the value of rupees 7,500. So we will have the entry to cash. Okay, shortcut I am just writing for you for understanding. Goods bought worth rupees 7,500. Then next we have a information what in terms of amount. They also paid, they means your here Moon and Company, okay, they also paid rupees 5,050 for freight insurance and cartage. That means some other expenses they are paying, again that will be your cash, because we are maintaining the joint venture in the books of Moon, and Moon is only doing this expense. This expense is amounting rupees 550. Okay, after that we have information that they have drew on Star and Company rupees 2,900. Okay, so this is they have drawn on the Star and Company, so that we will maintain when that we will do the entry when we are going to open the Star and Company account in the books of Moon. Okay, that will not come in your joint venture account. Now next we have Star and Company paid rupees 275 for storage, rent, etc. That means now some expenses are paid by Star and Company, and as I told, you are making the Moon, so now you have to, Star is doing some expense, we have to write the name. So we'll write Star and Company, some expenses they are paying worth rupees 275. Then we have information, the sales released rupees 12,500. So sales done by your Star and Company here, and sales we have just again and again I am repeating, you have to keep remember that joint venture account get debited by cost of goods and expenses, okay, which are done by your venturers, and it will get credited by the sales proceed and unsold stock and stock taken by the venturer. So now this is your sales released, okay, which is done by whom, which is done by the Star and Company. So sale we are going to do the credit, so it will be by, okay, who is doing the sale, Star and Company. Okay, I'm just writing in a bracket for your understanding. How much amount? 12,500. Fine. Further if we'll go, it's given the sales released rupees 12,500 and the sales expenses of rupees 250 were paid by the Star and Company. So that means Star and Company is paying one more expense. So one more expense entry, Star and Company expenses how much? 250. Then next we have information, the latter forwarded a side draft for the balance due to Moon and Company after charging their commission. Okay, so Star and Company is charging commission at 5% on the gross sales. So who is charging the commission? Star and Company, and they are charging the commission. That means it is again an expense only for the joint venture. Okay, so I'm writing again the small term, it's commission. How much commission they are charging? They are charging the commission 5% of the sale. So if we will calculate 5% of 12,500, then we are going to get the amount as a 625. Kindly do the calculation in calculator if you want. Okay, 12,500, 5% of this commission, that will be 625. And after that, no amount information. After that, just they have told you to show the joint venture account and other ventures account in the books of both the parties. So that means all the entries done. Now we need to calculate profit or loss. Okay, and what we have gone, if the credit side is greater than the debit side, then we will have the profit. So if you will make the total of this and this, definitely you will get to know that credit side is greater than the debit side. That means we have the profit. So we have to write here 2 profit transferred. Okay, whose account? One will be your Moon and Company's profit and loss account. Okay, one will be your Moon and Company profit and loss account, and the one will be your Star and Company account. Please keep remember. Here you don't have to write the Moon and Company name. You are maintaining in the books of Moon and Company only. So whatever the profit and loss he is going to earn on this joint venture, that will ultimately get transferred to his profit and loss account. So total profit, if we will go, total profit we have 3,300 and ratio was given 2:1. So for Moon and Company profit will be 2,200 and for Star and Company profit will be 1,100. And now just make the total both side equal amount 12,500. So this your joint venture account in the books of Moon and Company over. Okay, very simple transactions. Only one thing to keep remember, what all your cost of goods and expenses done by the venturers towards the joint venture account, your debit side, and all the sale proceed and unsold stocks and taken by the venturers will be your credit side. Just compare. Okay, if credit side is greater than debit side, then we will have a profit, and other will be your vice versa. Fine, and this profit will get transferred to the P&L account of the particular venturers. Okay, now in the books of Moon we need to maintain the book account of another venturer, that is co-venturer. And who is a co-venturer for Moon and Company? Star and Company Limited. Okay, sorry, no limited was there, I'm sorry. Alright, Star and Company. Okay, for this what you have to do, for this don't break too much head. Okay, just check your joint venture account, and wherever you are able to find out the entries on the name of Star and Company, just do the counter entry. Just do the counter entry of that here. Okay, so first I'll make your heading particulars amount. Fine, and if I'm going for just the counter entries, then first I'll take this. Okay, to joint venture account. Okay, shortcut 12,500 by joint venture. From your debit side I'll take now 275. One more entry to joint venture, again from your debit side 250. One more your joint venture, again from your debit side 625. One more your entry from your joint venture debit side, that is your profit. Okay, profit was 1,100. And now it is a time, okay, Moon and Company has drew a bill on the Star and Company. That means for Moon and Company it is bills receivable. They are supposed to receive the bill amount from the Star and Company. So we'll make the entry by BR, bills receivable. What was the amount? Amount was 2,900. Okay, and now after this, see, just cross check whether all the entries are over or not from the Star and Company name. So all the entries are over. Sales over, your 1, 2, expenses over, then commission over, and then your profit over. And then one was the entry which I told you it will be not appear in your joint venture because it's like Moon and Company is drawing on the Star and Company. So that is from Star and Company. Moon is waiting to receive the amount, bill amount of rupees 2,900. So buy bills receivables. From whom? From Star and Company. So now all the entries done. Now we have to do again the total, and then we will check out what the balancing figure we are going to get. If the balancing figure you are going to get credit side, then that will represent that Moon and Company supposed to receive that much amount from Star and Company. And if definitely another side, then it will be a vice versa. So if I'll make the total amount, definitely both side 12,500. Okay, and the balancing figure we are going to get credit side, we have to write it as a cash balancing figure. Okay, and balancing figure we are going to get 7,350. For your reference, okay, just here write down receive from, okay, wait, sorry, received by Moon and Company from Star and Company. Okay, so sale was proceeded by the Star and Company, and now Moon and Company supposed to receive 7,350 rupees from the Star and Company. So this is your accounts maintained in the books of Moon and Company. Now the term is we have to maintain the accounts in the books of Star and Company. So same heading you have to write in the books of Star and Company. First we need to open joint venture account. Okay, what joint venture account, what we have to do, we have to again write the heading particulars amount. Fine. And now what we have to do, as we are maintaining the Star and Company, okay, in the books of Star and Company, so whatever cost of goods and expenses done by the Star and Company, that will be entered here in terms of cash, and whatever cost of goods and expenses done by the Moon and Company, that will be here in terms of Moon and Company. So just what will be here, if we check from this account which we have maintained in the Moons and Company, whatever entered in terms of cash, okay, that will be here to Moon and Company, and whatever was entered here in the name of Star and Company, that will be here to cash. Okay, so just to quickly, to Moon and Company, they have bought the goods of how much? Value of 7,500. Just check here. Okay, then, and please same time you just do the cross check with your question also to make sure that you have not left any given amount. Okay, now the next entry to Moon and Company, that was for expense, how much? 550. Then the next entry to cash, okay, the expenses, okay, for the storage and rent which was paid by your Star and Company, 275. Then again the cash, the expense which was paid by the your Star and Company towards the sales, okay, sales expense 250. Now Star and Company has charged the commission. Okay, Star and Company has charged the commission, so for them it will be a commission, and here we have to do the entry as commission only. Okay, to commission, how much they have charged the commission, the Star and Company, they have charged the 5% of sale, which we have already calculated here, so we will have to write here 625. So only in terms of commission your entry little bit change, remaining all will be for other venturer, whatever the sales and expenses done, their name, and for whatever expenses you are doing, that is in terms of cash, only the commission, as you have charged the commission, we have the word commission here, so we have to go for the commission account 625. Okay, and here credit side you have did this time sale, so you have to write it here cash account only. Okay, whatever you are doing, that is your cash. So cash, how much sales value was? 12,500. Fine. Now again you have to calculate profit or loss. So as we were correct here and we have got the profit, so here again we will get the profit, and make sure both term you are getting the same profit or loss. If not same, then definitely the somewhere problem is, solution of the problem is wrong. Okay, so profit transferred, fine, to whom? Now again for the Star and Company it will be P&L account, and then we have to make the note of name of the another venturer, that is Moon and Company. For Star and Company the profit portion was 1,100, and for Moon it was 2,200. total profit we had 3,300 and total both side we have to just match, that is your 12,500. So this is joint venture account in the books of Star and Company over. Now in the books of Star and Company we have to maintain the account of other co-venture, that is Moon and Company. Okay, now again the same thing, whatever we have here entries in the joint venture account in the name of Moon and Company, just counter entry of that we have to do here. Okay, so first the heading particulars amount, okay, particular amount. Now from this just we are going to take the counter entry. So as we are able to see, we have only three places the Moon and Company name or entry in the name of Moon and Company. So we'll do the counter entry. Okay, by joint venture, one will be your goods bought value, then another by joint venture your expenses of rupees 550, and then one is your profit which was 2,200. Just check, only these three we have in the name of Moon and Company. Moon and Company 7,500, that is your goods value which they have bought. Then Moon and Company 550, that was the expense which they have paid towards the insurance and all. And then we had the profit in the name of Moon and Company which was rupees 2,200. So all three counter entries done. Now if you remember, Moon and Company has drawn bills which they were supposed to receive from the Star and Company, bills receivable. So this will be your now bills payable, because we are maintaining in the books of Star and Company. Star and Company is supposed to do the payment of bill to whom? To the Moon and Company. So we will do the entry here, bills payable. How much bills? The amount was 2,900. Okay, all entries done. Now again what we have to do? Again we have to make the total and calculate the balancing figure. So if we'll make the total, we will get 10,250, 10,250. Okay, and if we'll make the difference, okay, so 10,250 minus 2,900, we will get the amount, and which we have to again write in terms of cash. It is balancing figure 7,350. So if you are able to see, when you have opened the Star and Company account in the books of Moon and Company, you got 7,350 balancing figure, where I told you it will be received by the Moon and Company from the Star and Company. And now if you are going to check the Moon and Company account in the books of Star and Company, again we are getting the same balancing figure, and you have to make sure that you are going to get the same balancing figure. Okay, that is 7,350, and it shows that Star and Company is supposed to pay 7,350 to the Moon and Company. So 7,350. This, if again we need to write just for our reference, then this amount to be paid by Star and Company to Moon and Company. Okay, here in the books of Moon and Company, what we have seen, your credit side balance, cash balance, that means Moon and Company is going to receive this from the Star and Company. And in the books of Star and Company, okay, debit side cash balance, balancing figure. So what we are going to say it as a, that is Star and Company has to pay it to whom? To the Moon and Company. So this is your full solution of that one problem, which is your separate set of books maintained by the both venturer, where we used to open in both venturers account one joint venture account and the other venture, that is your co-venturers account, not your personal account, co-venturers account. So just go for this, try to watch again and again the last class, where hopefully your entries will be more clear, and then try to solve this. So for the day, this much. Okay, thank you, have a nice day, enjoy learning.